Hello students, Assalamu alaikum. Today we are going to solve November 2023 paper 12 of AS level. So here is your paper, November 2023 paper 12. Okay, MCQs for AS level. Okay. Uh, okay. Now, which list is a long-term source of additional funds for a limited company? Okay. See, bank loan, bonus issue of share, debenture issue. Now, in this A option, bonus issue of shares is not a source of fund. Okay, so this would not be the answer. Okay, bank loan, yes. Leasing of premises, yes. Right issue of share, yes. So it means B option should be the answer. Let's see why other two options are not the answer or could not be the answer. Bonus issue of shares, okay, useless. Leasing of premises, yes, but not trade credit. It's not a source of long-term source of additional funds. Even again in D option there is trade credit, so we could not answer D options. Getting my point clear? Okay. Now come to question number 2. Which statement describe advantages of maintaining full accounting records? A more complete assessment of business performance is possible? Yes. Bookkeeping costs are minimized? No. Business managers can make more informed decisions? Yes. Financial statements will be free from errors and inaccuracies? No, because maintaining double entry system and full accounting record doesn't guarantee for complete elimination of errors and inaccuracies. So it means only 1 and 3 options are correct for double entry system. So A option should be the answer. Okay. Maria recorded a check of 475 received from Josh, a credit customer. Okay. Now, Josh had deducted a 5% cash discount. The check has now been returned as dishonored. What is the correct entry to record the return of a check in Maria's book? Because Josh is a basically customer. So option A and option B could not be applicable because it contains discount receipt. Getting my point clear? Now we have to decide between C and D. Technically, what happens when a check gets dishonored by the bank? The customer's claim returns to the normal position. So what we have to do, we have to debit Josh. So D option should be the answer. And here, if you want to know why 500, because 475 is actually 95% payment. So what was the full payment? So if we divide 475 multiplied by 100 divided by 95. So the amount is 500, on which he got 5% discount and paid a check of 475. Getting my point clear? So D option should be the answer. Okay, question number 4. A business purchased a shop and incurred the following costs. Okay. Purchase price of the shop. Okay, this is capital expenditure. Legal fees incurred in the purchase of shop. This is capital expenditure. Cost of initial inventory. No. Cost of installing air condition is also a capital expenditure. Okay. So total amount of capital expenditure would be how much? 6,80,000 plus 7,200 plus 47,300. 734,500. So it means C option should be the answer. Total capital expenditures. Okay. Move. Number 5. A used motor vehicle was part exchanged from a new motor vehicle. The balance of the purchase cost of the new motor vehicle was settled by a check. What were the entries to record the part exchange value? Now, see, when we buy something, there is no chance of debiting the bank account. So A and B could not be the answer. Now we have to decide between C and D. If we have bought the motor vehicle without trading the old one, C option could be the answer. But because we have disposed of an old machine with and or traded in with a new machine, D option should be the answer. C option could not be the answer. Because we have not purchased motor vehicles directly, but we have traded in. Okay, with an old one. Okay. Now, a current asset of a business cost $300,000 in 2021. Okay. It is depreciated using the reducing balance method at the rate of 40% per annum. A full year's depreciation is provided in the year of acquisition, but none in the year of sale. The financial year of the business ends on 31st December. In 2023, the item was sold for 1,50,000. Disposal cost of 15,000 were incurred. Okay. What was the profit on disposal? Okay, see. If it is of 300,000 multiplied by 40%, so first year depreciation is 1,20,000. And 1,20,000, so 3 lakh minus 120,000, the book value is 180,000. Second year, 40% means 72,000. So it means the book value is 108,000 in 2022. In 2021, it was 1,80,000. In 2022, it is 108,000. In 2023, we are not going to calculate the disposal depreciation because we are disposing. The year of there is no depreciation in the year of disposal. Are you getting my point clear? So we don't need to calculate depreciation for year 2023. Okay, now the book value after 2 years of depreciation is $108,000. Okay, minus it was sold for 150,000. That is 42,000. Minus 15,000 disposal cost, which means 27,000 is actually the profit on disposal. Getting my point here? So A option should be the answer. Okay. A business received $100 cash from a credit customer in settlement of a debt. When recording it, an error of commission was made. Which statement about the debit and credit column of the trial balance is correct? This error is of commission is not going to affect the trial balance. Because this is error not affecting trial balance. Error of commission is the second error not affecting the trial balance. So we have to find out the options. The total of both columns were the same if the error had not taken place. So it means C option should be the answer. Why? Because all this option, one is saying higher, 2 is saying higher, and D is saying understated or lower. Okay? Error of commission has zero impact on trial balance. Okay. Now come to 8. A company's trial balance includes a suspense account. It was found that the only errors were discount received for 240 and discount allowed 312, which had been entered on the incorrect side of the respective ledger accounts. Okay. What is the double entry required to clear the suspense account balance? Discount received should be credited, but it was debited. Discount allowed should be debited, but it was credited. Okay. So remember always, if you have entered on the wrong side in any account, you have to come back with a double amount. So discount received is going to be credited by double amount, that is 480. Discount allowed is going to be debited with double amount, that is 624. And suspense account is going to be credited with the difference. Okay. So discount allowed should be debited that was how much? 240, sorry, the discount received for 240 multiplied by 2 means 480 should be credited. Discount allowed should be debited by double amount 624. Okay, I think this is the only entry, option B, which says discount allowed is going to be debited by 624. So B option should be the answer. Okay. What big statement describes the benefits of preparing a bank reconciliation statement? Checks the accuracy of transaction recorded on the bank statement. Okay. Ensures that okay, this is correct. Ensures that the cash in the till agrees with the total of the cash column in the cash book. Bank reconciliation has nothing to do with cash in hand. Okay. Eliminates the possibility of frauds by member staff. Bank reconciliation. Okay. Bank reconciliation has nothing to do with the possibility of fraud. Okay. Then bank reconciliation ensures that the trial balance and financial statement contain an up-to-date figure for the cash at bank. Yes. So it means C option should be the answer. 1 and 4 are the correct statements. Okay. Number 10. A trader's cash book show a debit balance of 12 under 460. Bank charges 4,500 had not been entered in the cash book. A check of 14,470 received from credit customer and a check of 1,740 paid to a supplier appear in the cash book but not on the bank statement. What is the balance shown on the bank statement on 30th April? Okay, now see. Balance as per cash book 12,460 minus bank charges 4,500 minus 14 uncredited checks. $14,470 okay. Okay. So 12,460 12,460 minus 4,550 sorry 4,500 okay minus 14,470 plus 1,740 4,770 debit. The bank statement will show an overdraft of 4,770 pounds. Okay. Okay, now question number 11. A credit customer gave cash to a sales ledger clerk in part settlement of a debt. The clerk was dishonest and kept the cash for himself. He entered the receipt in the customer's sales ledger account but made no entry in the cash book. What caused the theft to be discovered? A bank reconciliation statement? No. A sales ledger control account reconciliation statement? Yes. Okay, because sales ledger control account always prepared to get to eliminate frauds. Okay. Okay. The following information is available. Okay. What is the value of credit sales? Okay. Now we have to see what are the items that are going to appear on the credit side of a control account. Okay. Balance of trade receivable at the end of the year. Balance CD. Not trade discount. Cash discount. Irrecoverable debt. Nothing to do with allowance for increase or cash received from credit customers. These are the items on the credit side. So what we have to do, we have to add all these items. 65,300 plus 4,500 plus 6,200 plus 516,000 minus opening balance of trade receivable 48,000, and the difference is actually the sales. Okay, this is 544,000. Okay, we have added all the credit items of control account and we have deducted the opening balance and we get the amount of sales. Okay. At a business financial year and there were expenses owing, expenses prepaid, income owing, and income received in advance. How will the ledger account balance brought down at the start of the new financial year appear in the general ledger? Okay. Expenses owing. Okay. Expenses owing will always be credit. It's a credit balance, is a liability. And income received in advance is a liability. Okay. So expenses owing and income received in advance are liabilities. So it means C option should be the answer. Okay. Means expenses prepaid are assets, income owing are assets, current assets. Getting my point here? Okay. A business prepared a statement of profit or loss for the year ended 31st December. During the year on 30th April, a non-current asset had been sold. The following information is available. Cost, sale proceed, residual value, carrying value at 1st January, expected life. Non-current assets are depreciated using the straight line method, with depreciation being charged for each month of ownership. No accounting entries had been made in respect of this non-current asset for the year ended 31st December. What was the effect of this emission on the profit for the year? If we are following straight line method, okay, and we are following the convention of calculating depreciation for each and every month, it means when in the year of disposal, if it was being used for 1, 2, or 3, or 4, or 5, or 6 months, even 9 months, even 8 months, we have to calculate this depreciation. Okay. So April means January, February, March, April. It was used in the year of disposal for 4 months. So we have to calculate the depreciation for 4 months. And if we do not follow this rule, what happened? First, we have to calculate cost minus residual value 10,000. 120 is the depreciable cost divided by life in years 8. It means annual depreciation is 15,000 multiplied by 4 divided by 12. It means 5,000 depreciation was supposed to be calculated in the year of disposal for using 4 months. It means, and if we have not deducted our it means it is going to affect our profit. Okay. What could be the possible reason? What could be the possible amount? So it means 5,000 of expense depreciation is left. Okay. 5,000 of depreciation is left. So it means profit of the year should be decreased by 5,000. Okay. Should be decreased by 5,000. Now, if we take sale proceed 53,500, okay, minus 52,500. But now carrying value is not 52,500. Carrying value would be declined. 52,500 minus 5,000 depreciation for 4 months. So the carrying value is 52,500 minus 5,000 is equal to 47,500. Now this is the carrying value. After 5 months, after 4 months, This should be the carrying value, 47,500. Now, this year profit was supposed to be decreased by 5,000. And now see what is the sale proceed, 53,500. So 53,500 minus 47,500, it means there is a profit of 6,000. Okay. If we deduct 47,000, the new carrying value on 30th April, 47,500, because of this 5,000, our profit is going to, the profit on disposal is 6,000. So this year's profit was going to be decreased by 5,000 due to 4 months depreciation. And this year's profit is going to be increased by 6,000 because of disposal. So the net effect on decrease in capital, decrease in profit is 1,000. Okay. So option A should be the answer. Getting my point clear? Okay. Now 15. The owner of a trading business prepared draft financial statement for the year ended 31st December. It was then discovered that the following transaction occurred during the year had not been recorded. Okay. A check for $500 had been received for commission earned. Cash amounting to 2,900 was received for a sale of goods which had cost 3,000. Inventory cost of 5,000 had been taken from the business by owner for personal use. Non-current asset carrying value of 6,500 had been sold for 7,000 cash. Which transaction will affect both the gross profit for the year and the value of net assets on the statement of financial position? Okay. So, okay. Now we know this transaction. Sale of goods is going to affect gross profit. Commission earned is not going to affect. Okay. And non-current asset with a carrying value, number 3, actually. Inventory costing taken by the owner, it is going to affect the gross profit. Goods taken up by the owner. And non-current asset with a carrying value of 6,500 which sold for 7,000. This is also not going to affect the gross profit. Okay. So 2 and 3. Now see. They both are going to affect gross profit and net assets. Net assets means capital. Okay. They are going to affect the capital. So C option should be the answer. Okay. 16. A business sells some inventory on for $80 on credit. The originally cost $50. How does the effect of financial position? Okay. Current asset is decreased by okay. Now inventory is decreased by 50 and one current asset. Inventory is decreased by 50. One current asset receivable is increased by 80. So the net is increased by 30. Account receivable or trade receivable. So it means the answer should not be A or B. So answer could be C or D. Okay. Now owner's capital. The owner's capital is increases if we are selling goods on or NRV is greater than the original cost. It means we are going to earn. So the owner is going to earn $30. It means C option could not be the answer. So what is left now? Yes, D option is the answer. Okay. Okay, 17. Which entries are made to record interest on capital in partnership? Okay. Interest on capital means the current account is going to be credited. Are you getting my point clear? The current account is going to be credited when partners are given interest on capitals, the current account is going to be credited. So B option should be the answer. Okay. Now, L and M are in partnership sharing profit and losses in the ratio of 3:2. For the year ending 31st March, their statement of profit and loss showed a profit for the year 68,000. The following information relates to partnership for the same period. Interest on loan from L, 400. Total for interest on capital, interest charge on drawing, salaries, 20,000. How much the residual profit will L receive? Will L receive? Okay. Okay. So what we have to do? So what would we do? First thing, this interest on loan has nothing to do with the profit and loss of inflation account. Done? Okay. Now, this 1200 interest on charge on drawing is going to be added in the profit. So 68,000 plus 1200. 68,000 plus 1200. 69,200 minus interest on capital 2,600 minus 20,000 salaries. The residual profit is 46,600. Multiply by 3 divided by 5. 27,960 is the answer. So this is the answer. Okay. Which reserves are revenue reserves? Okay. See, general reserve. Okay. It's a revenue reserve. Retained earnings is a revenue reserve. Revaluation reserve is something to be done, something belong to non-current assets revaluation, and share premium account is related to long-term liabilities, reserve with the long-term liabilities. So A option should be the answer. Okay. A option should be the answer. A limited company has the following in its statement of financial position 31st March. Ordinary share capital, okay. Retained earning, okay. Share premium. Ordinary shares have a par value of $0.4. A bonus issue is made on the basis of 3 shares for every 8 held at 31st March. This issue is made so that reserves are kept in their most flexible form. Okay. What are the balances on the reserve account after the bonus issue had been made? Okay. See. The ordinary share capital, $200,000 divided by 0.4. It means we have 500,000 ordinary shares. Number of shares, 500,000. Okay. Now, multiply by 3 divided by 8. It means we are issuing 187,500 shares, 75,000. Okay. So it means C option should be the answer. How? C. Because we don't need to use retained earnings for issuing bonus shares. We'll use only share premium because the share premium account balance is 80,000, and out of which bonus issues could be settled for 75,000. So it means share premium is left with 5,000 and retained earning has no effect. So C option should be the answer. Okay. A company has calculated inventory turnover periods for 2 successive years. Year 1, inventory turnover in days, 90. Okay. Year 2, 120. Company directive suggests the following reasons for the change. Okay. What are the possible reasons for the change? यार ये रुकता क्यों नहीं सही से? Okay. अब सही. पूरा सवाल होगा. Okay. We can see the whole question. Okay. Okay. See. Oh, I'm sorry. Okay. Purchases have decreased. I don't think so. Okay. Purchases have increased, yes. Okay. And sales have decreased. Sorry. Sale have increased. This could not be the reason. The only two reasons which make inventories to be kept in the store is if you have increased the purchases or your sales have decreased. So the possible answer is C. Okay. Now 22. Okay. The following information available for business at the end of its financial year. Okay, we have to calculate trade receivables turnover. Okay. Whenever you do any question of ratio, you should write the formula. So how we calculate trade receivables multiplied by 365 divided by credit sales. Trade receivables how much? 16,000 multiplied by 365 divided by credit sales 220,000. Almost 26.5 means 27 days. The nearest option. Now 23. A business commenced trading on 1st January. The purchases and sales of inventory for January as follows. January 4, we have purchased. January 26, we have sales on 13 and the business uses the FIFO, first in first out method of inventory valuation. Okay. What was the gross profit for January? Okay. So what we'll do? Sales in first sale, $400 multiplied by 2 is equal to 800. Okay, cost 200 for multiply by 2 is equal to 400. This is the cost. So it means profit is how much? 400. Okay. Now second sale. Again we are selling for 400 multiply by 2. That is 800. Cost. Now cost. We have 1 unit of 200 is left. So 1 unit of 200, that is 200. And 1 unit we will use from 250. So the cost is 250 and the profit would be 350 in the second sale. Okay. First sale 400. First sale gross profit is 400. From second is 350. Total is 750. So the option should be the answer. Okay. Oh, the company has been asked to quote a price for a specific job. Estimated costs are as follows. Direct material, direct labor. Overheads are charged 50% of labor cost. Price is 20% of the total job cost. Profit is 20% of it. What is the total quotation for the jobs? Okay, direct material plus direct labor plus overhead. So DM, okay. DM, direct material, DM is equal to $2,000. DL is equal to direct labor, $3,300. And production overhead is equal to how much? 50% of labor cost. 3,300 divided by 2, that is 1,650. 1,650. So the total cost would be for the job is how much? 1,650 plus 3,300 plus 2,000. 6,950. Total cost? Okay. 6,950 multiply by 20% of the profit means multiply by 120%. The answer is D option. Okay. D option is the answer. Now, a manufacturing business. पूरा सही से नजर आना चाहिए ऊपर नीचे. A manufacturing business and service department X and production department Y and Z. Department Z is the labor intensive. How is the overhead absorption rate set for department Z? Okay, on the basis of direct labor hours. Okay. On the basis, it's simple. Apportion to labor intensive means for department Z, it should be based on budgeted labor hours. Okay, whatever the overhead. Absorption rate. So these two options could not be the answer. Actual labor hours. Okay, now we have to decide between A and C. Okay. Now B and D are useless options. Now check. How to check? Apportion total overheads across XYZ in option A. Subtract X overhead from total overhead. No. Oh, sorry. Subtract X overhead from total overhead. No. So it means A option should be the answer. Getting my point clear? B and D are useless options. We apportion overhead on the basis of budgeted labor hours. So A or C could be the answer. So we have excluded B and D. Now between A and C, C says that X overhead should be subtracted from total overhead. Not possible because X is a service department. It's the cost of X department should be apportioned between X, Y, and Z. Okay. Now, 26. What would cause overheads to be under absorbed? Oh my God. Under absorbed means actual overhead cost is greater than the overhead absorbed rate. Simple. Actual is greater. So, absorb is greater. Now see, these two options, B and D, are useless because it's saying less. Okay. Now, between A and overhead absorbed is greater? No. Actual overhead is greater. C option should be the answer. Okay. Now 27. A business produces two types of product, P and Q, for the month of January. Overhead are absorbed using direct labor hours. The production details are as follows. Units manufactured 5,000, Q, direct labor hours per unit 1.5 and 1. Direct cost for the month 23,750. Fixed overhead 6,000. What was the overhead absorption rate per hour? Okay. Okay. Now see. Here for P, the labor hours will be how much? 5,000 multiplied by 1.5, 7,500 hours. And here it will take 2,000 hours. Okay. Up to 2000 hours. Total we have 9,500. Now overhead 6,500 divided by 9,500, answer 6.8. So it means this option is the answer. Right? Acha. Which statement about marginal costings are correct? 28. Contribution is the difference between sales revenue or total production cost. No. The variable production cost, not total. Costs are classified variable and fixed cost only? Yes. Variable cost includes variable selling expenses. Yes. It means this should be the answer. D option. 2 and 3 are correct. Okay. 29. Okay. The following relates to a manufacturing business. Okay. Production for the period. Uh, how much? 2,400 units. Closing inventory 400 units. Direct material, direct labor, fixed factory expenses. There was no opening inventory. Okay. Closing inventory is valued using marginal costing. What is the marginal cost per unit of the finished goods? Okay. Now what we do? We'll take all the direct cost, 12,000 direct material, 6,000 labor cost, 18,000 divided by total units produced, 2,400. So the marginal cost per unit of the finished goods is $7.5 per unit. Okay. Which statement reflect how cost volume profit analysis can help management with the decision making? Separating out fixed and variable elements of cost? No. Setting short-term prices? Yes. Understanding change in business environment? No. This could not be the answer. Understanding change in the product mix? No. CVP analysis is only helpful in setting prices for the short term. Okay. So that's all for today. Inshallah, tomorrow we'll continue with AS paper 2, inshallah. So that's all for today. Take care. Allah Hafiz.